Welcome back. You're watching Market Fatafat on ET now. Let's keep it going with all the stocks that have been buzzing in trade on the back of news flows, Q1 updates. And talking about Q1 updates, we do have Nykaa that reported its operational update. When you look at it, overall, the growth that they're expecting this time will be around 22 to 23% for the quarter ended Q1 FY25. The gross merchandise value growth for the quarter would be in somewhere in the mid 20s. So it was almost a bit of a subduedness that we saw at the beginning of the day, because in line with what the street was expecting, they were expecting a higher growth. So yes, we saw that fall. Then the stock surely recovered, as of now holding on to gains of 0.7%. Now when you look at it, beauty revenue growth expected to be in that 22 to 23% range. GMV is expected in high 20s, while fashion segment is expected to deliver a healthy growth. Revenue growth of around 20% is what we could watch out for, as well as in terms of the gross merchandise value, also a decent growth that we're expecting for the fashion segment. So yes, on the back of that, today we're keeping an eye out on Nykaa, up 0.7%, holding in at 178 rupees per share.
Right, that's the news flow on Nykaa. But moving on, let's talk about PCBL, because this counter is in focus after the company announced that they have actually won a patent, and the company did say that the carbon black makers have secured patent for hybrid carbon black grade comprising graphene, and that's an innovative innovation that includes improvement in fuel efficiency, tire durability, as well as load bearing capacity. On the back of this particular news flow, the stock is in focus today, holding on to the gains of almost 3.5%, but PCBL has been on the roll for the past 4 days as well. If you will see, then the stock has been moving sharply, and today's trading session on the back of this particular patent win, the stock is in focus.
Okay, surely we are keeping an eye out on PCBL. Let's move on to the next stock that we have in focus, and Ajmera Realty. Jinay, why have you picked out this stock for us today?
Well, the company reported its operational update for Q1. If we talk about the sales, that sales value stood at around 306 crores, which was an improvement of about 36% year-on-year basis, and collections stood at 165 crores, coming up with an uptake of about 49% year-on-year basis. Now, company also gave an update on their recent launch, which was Ajmera Vihara at Bhandup. It has seen a launch which was launched at the end of May 24. The company has already sold about 27% of its inventory. Now, Dhaval Ajmera, who is the director of Realty and Infra, said that Q1 FY 2025 began with a significant progress, marching towards full year guidance. Also, they have a pipeline of about 7 new projects with an estimated GDV of about 4,300 crores. And if you talk about the sector outlook, the company, Dhaval Ajmera, said that they are very positive on the sector outlook as a whole. Also, he was earlier on ET Now, where the management told that they are seeing a very good demand for commercial real estate, and they will be allocating about 20 to 30% of their portfolio to commercial operations going forward.
Well, yes, that's the news from Ajmera Realty, but indeed we had a word with the management, Mr. Dhaval Ajmera, where he talks about the commercial real estate plan. So let's go across and listen into him.
Launch which we had this year, we just launched one of the projects which we had announced. This year we're going to do about 6 to 7 project announcements, and one which we just launched, and that had a very good response, which we did in Bhandup. And overall, from the inventory, we've sold about 27% of the inventory already sold in just 1 month of the launch. So it was a great response, and overall the market has been responding well. Primarily right now, if we go to see, most of our projects are going to be residential, but we are also slowly moving into commercial, because we are seeing good demands. We had a great success in Ghatkopar for one of our projects, and now this year and probably coming, we are going to have a few more coming in Wadala, Bandra and other places. So definitely in commercial segment also we are moving, but with the kind of portfolio what we currently have, at least I'm seeing more of residential, but in terms of commercial also, we would be about 20-30% within our portfolio being commercial.
All right, we're moving on, and with this, let's welcome our second technical expert on the show today, and we are being joined by Sameet Chavan. Sameet, hi, very good afternoon, and thank you so much for your time. Let's talk about the first counter that you have picked up, and that is indeed HUL, a sector that is all in all having great day today. And for HUL specifically, Sameet, tell us, how do you see the setup and what are the levels that you're watching out for?
Good afternoon. See, the entire FMCG space has been buzzing since last, couple of trading sessions and since morning also. If you see, the entire FMCG basket, has been outperforming. Uh, Now, if you see, overall, as far as actual is concerned, this stock has already found a good base. After giving a decisive breakout, last month. And now, after spending nearly 2 to 3 weeks around its important cluster of support, the stock is now resuming its upward trend. So overall, we expect the entire FMCG basket to do well. It is likely to outperform some of the other heavyweight spaces. And as far as levels are concerned, we expect 2650, 2680 to be tested quite soon. And as a disclosure, we have recommended this to our clients to trade through call option.
Okay, keep an eye out on HUL. Let's move on to the next stock that we're highlighting today. That's MAN Industries. Why is that in focus? And in the last 1 month, 6 months also, we have seen a sharp up move coming in for the stock. Now today, why we've picked out this stock is because they've received a pipe order worth around 1,850 crores. It's the single largest order win for them ever. Now, Oil and Gas International Company awarded MAN Industries to supply this high value-added line of pipes, which is API 5L grade for the mega offshore project. It's expected to be completed between 12 to 18 months. So on the back of this today, we are seeing MAN Industries managing to hold on to gains of 6%, almost near the day's highest point. Last 6 months, almost a 55% return already. And in the last 1 year, it's managed to move up from those 137 levels to almost 493 today, so a 260% uptick. Already a lot of orders that they've recently won in this last year, so interesting to watch out for this one.
All right, moving on, let's talk about the company that we don't discuss much often, and that is Nava Limited. This stock is on the roll on the back of the announcement of a lithium exploration license for the company. Anything that's related to new energy, EVs, is definitely actually appreciated by the market participants. And Nava Limited has come out with a positive announcement indeed, where the company did say that they have engaged in mining and ferroalloy manufacturing, and they've also said that their Zambian unit actually received 2 large-scale exploration licenses for lithium and other minerals for the next 4 years. And indeed, on the back of this particular news flow, the stock is actually gaining almost 4.5% in trade right now.
Okay, keeping an eye out on Nava Limited today, but let's move on, talk about Tata Steel on the charts and technicals then. And Sameet, what's the word for Tata Steel? In the last 1 month, seems like a bit of a decline that we've seen coming in for the stock. Would you wait out for more of a decline to buy, or is it a good level to start entering Tata Steel one more time?
See, as a short to medium term investor, it would be a buy on declines around 165, 160 odd levels. But as a momentum trader, we are seeing some weakness. So as a momentum trader, one can take a punt, on the short side as well, or else one can look to buy at the money strike put options as well. The stock is clearly, is on the verge of a breakdown from its important support of 171, 172. That would confirm inverted, flag pattern, which is a bearish pattern. And from there on, you would see this continuation of this, correction towards 165, 160, wherein, medium term view, you would see some sort of, support coming in. So overall, at this juncture, as a momentum trader, it looks weak, and we would expect this stock to continue this correction.
All right, that's take on Tata Steel. But with this, viewers, it's once again time to swim into a very short break. Don't go anywhere. We'll be right back.
Welcome back. You're watching Market Fatafat on ET now. As of now, where the markets are holding on to 24,280 levels is what it's managing to hold on to. But keeping it going with the stocks then. And Jenna, you've picked out Bank of Baroda for us. Is this also in focus on the back of its update?
Well, so the company is focused on the back of its operational update for Q1. If we talk about its updates, then the global business saw a growth of about 8.52% on year-on-year basis. Also, the global deposit growth saw a growth of about 8.85% year-on-year basis. Now, if we talk about the domestic advances, it grew about 8% Y-on-Y basis. Also, we have a brokerage note by Citi, who is actually rated buy rating with a target price of rupees 300. They say that the Q1 FY 2025 of the business, the growth was moderately sharp. Also, balance sheet consolidation and NIM management seems company's top priority. They say that the normalization of credit cost could be offset by higher Q1 seasonality, and also absence of wage revision impact will be providing support to broadly stable ROE is what Citi believes now. But if you look at the stock price, it is trading with a downtick of about 3.89%. So clearly Street is not liking the operational update by Bank of Baroda.
Okay, surely keeping an eye out on Bank of Baroda on its Q1 update, trading at the day's lowest point as of now. Let's move on and talk about Kiwi Industries. That stock is buzzing away in trade. Now, what has happened is they've actually received a court order to sell 37.57% stake in Dystar for around $603 million as per the SICC judgment, which is outside the scheme of arrangement. So on the back of this, there's a possibility that obviously if they will do the stake sale, their balance sheet, they will get in some cash. This balance sheet will become stronger for the company. Kiwi Industries surely holding on to some gains, but we'll keep an eye out on further more in terms of this sale of stake that they may do. More updates on that. As of now, they've just received this court order, so that's the main reason today the stock is holding on to gains. At one point of time, it was up as much as 11-12% in trade as well.
Alright, but another stock that is on the move is Adani Wilmar, though for this particular counter, the gain is in the range of 2 to 3%, and the news flow is the Q1 updates. A good update coming in for Adani Wilmar, in line to what the street was expecting in, where the company did say that they have achieved volume growth of 13% on a YY basis, and that push is coming in from their gain in the market share across the categories, and especially in the under-indexed market. Other than that, the company also says that they have continued to grow 19% actually volume growth is there in Q1, and the volume of their branded export has been increased by 36% on in Q1 on a YY basis. So on the back of these operational updates, Adani Wilmar is in focus and indeed having a good day today.
Okay, that is Adani Wilmar. Keep an eye on this one. One more company from the FMCG side in Q1, which is managing to hold on to very strong gains. But let's move on and talk about Info Edge Jinay. This one also came out with some business update. One, what was the update highlighting? What is the stock doing? As well as what's the brokerage highlighting?
Well, yeah, so the company came up with Q1 updates. If you look at the standalone billings, it stood at 579 crores versus 523 crores. So saw an improvement about 11% year-on-year basis. Also, we have a note by JP Morgan. They have maintained their overweight rating with the target price of rupees 6,900. What they believe is that Naukri billing is in line, and if we talk about the job speak index, that doesn't clearly indicate a recovery in IT. Now, what they believe is that Info Edge is a relatively cheaper stock and a higher quality play if anyone wants to play IT recovery play. Also, they're expecting a consistent improvement in Naukri billings momentum, which will be a key driver for the companies and company stock performance, is what JP Morgan says. If you look at the stock price, it is currently trading with an uptake of about 0.8%.
Okay, let's move on to the next stock that we're highlighting, and that is Raj Ratan Global and Wires. And why is this stock in focus? We have Investec that came out with a note post their plant visit, where they're maintaining a buy rating for the stock and a target price of around 917 rupees per share. Previous target was somewhere at 586 rupees per share. They said that the management's interaction reinforces conviction for them that on the quality of the management, including the second generation, and they demonstrated this was demonstrated by the clarity of the thought on ground execution and incremental growth plans, including for tire cord side, that is taking into account that the technology ask leverage amongst others. Now, other than that, the newest Chennai facility also offers an attractive 16% as well as 25% return on capital employed, excluding as well as including the PLI scheme respectively, on a normalized spread at an optimal value of utilization. Now, facility offers optionally the doubling of capacity. So yes, on the back of that, they're keeping an eye out on this, because that additional charge to double the capacity would be somewhere at 150 crores. But today, on the back of this, we're seeing Raj Ratan Global Wires managing to hold on to good gains of 5.5%.
All right, we're moving on. And Sameet, once again coming to you, you have picked up BEL, and there's been no stopping for this particular counter after a recent breakout of around 320 odd levels. Tell us more. How are you spotting this on the chart, and what are the targets that you're looking out for?
Yes, in fact, there's no stopping for this, entire defense space. As far as BEL is concerned, After a sharp knock on the election verdict day, the stock recovered. It gave a V-shaped recovery, and after a brief pause, the stock again resumed its upward trajectory. On Friday, we witnessed a breakout from its previous hurdles, and thereby it has now entered an uncharted territory. So as far as levels are concerned, 352, 354, these are the next levels to watch out for. And as a disclosure, we have recommended this to our clients on Friday as well, when this breakout happened around 346. So overall, the bias remains positive. Any decline would be a good buying opportunity. And now, the earlier support, which was around 260, 270, it has shifted higher towards 320, 330.
For BEL, the levels that Sameet is looking is around 350, but that comes with a disclosure as well. But with this, let's move on. Let's talk about Texmeco Rail, because the railway counters are also seen to be buzzing, and Nuvama has actually initiated coverage on this particular counter with a buy rating, and their target price is 331 rupees. What they're highlighting is that the company is well placed in terms of the surging railway capex. There's been robust wagon ordering for the company as well, and the net cash balance sheet, the cash on the books is actually higher than the debt of the company right now. The improving execution and the margin as well as the working capital trajectory should help Texmeco clock a profit CAGR of 45% over FY24 and 27 is what Nuvama is highlighting. And on the back of this particular report, this stock is in focus, holding on to the gains of almost 4.5% right now.
Okay, let's move on to the next stock that we should highlight on the technicals. And Sameet, you picked out ONGC for us. Today, the stock is surely managing to hold on to good gains. Last 6 months, almost a 37% return. What's the outlook now on ONGC at 300? Is it a buy?
Certainly, yes. We are quite upbeat on this counter. Overall, if you see on Friday, the stock gave a decisive breakout from its nearly 2 months, 3 months, consolidation phase. The stock is now trading at its highest level since October 2014. So after a long slumber phase, this stock has finally found its mojo back. And overall, if you see in every rally, we are seeing massive volume activity, and in every pause or correction, it is happening on low volume. So that suggests that inherent strength this particular stock has. So overall, we are quite upbeat and will not be surprised to see this stock surpassing its previous all-time highs, which is around 315, 320. So our short to medium term target for this counter would be around 330, and with a slightly broader view, will not be surprised to see this stock even heading towards 380.
All right, that's the take coming in on ONGC. But another major, Jinay, is L&T. Tell us what's the news flow out here.
Well, so the company earlier today reported that the renewable arm of the company has finalized a mega orders ranging between 10,000 to 15,000 crores. This is for a leading developer in Middle East to build about 2 gigawatt scale solar PV plants. Now with this, the total plant cumulative capacity will be of about 3.5 gigawatts. Now the scope of this order also includes grid interconnections encompassing pooling substations and overhead transmission lines. Now commenting on this, Mr. S.N. Subramaniam, who is the chairman and managing director of L&T, commented that Middle East is far ahead of creating sustainable energy infrastructure, and these orders are welcome for the company's green portfolio. And if you look at the stock price right now, it is actually trading flat with the gains of about 0.19%.
Okay, Jinay, thank you so much for that update there. But that was the last talk for today. So thank you so much, Sameet, as well as Jinay, for joining in with us on the show this afternoon. But yes, we're seeing rains pouring in Mumbai. Not only Mumbai, IMDb had a short while ago, according to agencies, said that they will see heavy rainfall even in Andhra and interior Karnataka side of rains today. That in those regions is where we could see the rains, and extremely heavy rainfall over the parts of Madhya Maharashtra today is what one is expecting. But talking about that, Mumbaikars woke up obviously to the submerged street. Heavy rainfall overnight led to significant waterlogging in the various parts of Mumbai specifically, and waterlogging has led to a long traffic jam and disrupted local train services. Meanwhile, what IMDb also gave was a yellow alert that came in for Mumbai. Shweta is joining in with us to give us the latest update on that. Shweta?
Well, right now we are present at BMC headquarters, and these visuals we are bringing you from the control room. Now remember, after torrential rain, it has been monitored by the BMC officials from the control room, where all the officials are tracking and monitoring each system from here. And to see, so just one question, we have been seeing, we understand all the BMC officials are on point to track and trace every low-lying areas, and of course the maps are also being monitored by them. All the areas, all low-lying areas, expressway are being seen in multiple cameras, as my video journalist Chandan is showing you. This is to spot the waterlogging places as well as inundated places in and around the Mumbai city, as well as in the western and eastern suburbs. What we also understand is that in 6 hours of rain, there has been around 300 mm of rain which has been witnessed in the eastern side expressway. And talking about western side, that's more than 200 mm of rain that has been observed in the BMC data as well as by IMD data of rainfall. Now taking you through this control room, however, we are not allowed to go inside, but we are bringing you the report from where the BMC headquarters, the officials has been tracing and seeing all the things. Now I'll quickly tell you, it's we can just read few things. The logistic officer is there, the call receiver, safety officer, call receiver. These are some of the, and also the monitoring system. Plus the fire brigade team is also being seen in the visuals. So currently what we are showing you is how Mumbai is being monitored. Chandan, if you can show this side. This is the multiple cameras which have been placed, and we are seeing that there have been multiple sites from where all the important areas of Mumbai are being monitored, just to check that rain mayhem does not create devastating effects on Mumbaikars as far as heavy rainfall is considered.
Thank you so much for that update there, Shweta. That was about, the updates coming in from the BMC side, the control room over there. But on that note, we're absolutely out of time on this edition of Market Fatafat. So it's a goodbye from Shrishti, myself, as well as the team who put this show together. Don't go anywhere. Closing trades will take the action forward.
If you like this video, then like, share and subscribe to ET Now.